Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, this is going to be an important week for the markets, and the reason is it's Fed week. The Federal Reserve will meet on Wednesday and determine whether or not there's going to be any change to monetary policy. The fascinating thing about this week being Fed week for the June meeting is that it wasn't all that long ago that we would have been speculating as to whether or not the Federal Reserve was going to raise rates, because remember they had started on a rate hiking campaign. Now with pressure from President Trump and others are saying that they raised too far, they shouldn't have raised in December, and they're going to take that one back. And then they're switching from a rate raising cycle to a rate cutting cycle. So now there's speculation as to whether or not they'll actually cut rates at the meeting. I don't think so. I don't think that they'll do it here in June. I think, one, it would look like they're cowering down to political pressure. And the other thing is I just don't think the data has been quite weak enough yet, especially when they're just making an about face. Remember, the market rallied. That was the big turnaround in the market when the Federal Reserve said basically they'd do whatever. So some say that they were actually telegraphing that they are going to make a surprise rate cut this week. But again, my personal opinion is I don't think they will this meeting, but maybe so. But it does appear that we are heading towards lower rates, and the market likes that. Speaking of the market, let's take a look at the charts and see where we are. All of the SPY, you can see that we have pretty much gone sideways through here, which is fascinating, isn't it? We went through and we labeled all this, looking at last week's recording, this wonderful zigzag pattern that we had here, and the wave 4 correcting right to that extension level on the wave C. And then what's supposed to happen? You're supposed to retrace that last impulse move, and that's what the market did. And look what's happened since then. It's just like they ran into the ceiling, they bumped their head on the ceiling, and they can't go. We've just been going dead sideways ever since. Again, amazing, these Fibonacci levels, Elliott wave, all of this acting as support and resistance, which is really what it amounts to when you're looking at trends, etc. But I don't know if you could get a better example of it than that. We've just gone dead sideways as soon as that last C segment of the zigzag was retraced. And now we're waiting to see which way we're going to go, and the market may just continue to trade sideways until that meeting on Wednesday, and we see what the Federal Reserve is going to do. So that wouldn't be surprising to me at all. Another thing that I wanted to show you was back here at TBT. Remember, we look at interest rates, and especially during a Fed week, we want to look at interest rates. But take a look at this chart. Remember that we had also, this was the other part of the Goldilocks scenario, was that we had rates come down and find a level of support. And that gave the market some ammunition. Well, look what's happened with the bond market. It's actually gone dead sideways too, just like the equity markets have. And if anything, we had a little bit of a bounce, and now we're kind of peeling back just a bit. And that's some money moving into bonds just in case there is that surprise rate cut. Once the Federal Reserve meets, if they don't cut rates here at the June meeting, I would expect to see interest rates move back to the upside, and maybe the market could break out of this sideways move and at least test the previous wave 3 high, if not march on up to that wave 5. But remember, there's still room for more correction in the wave 4 if that is in the offering. But we'll see. Again, I think Wednesday is going to be the key, so we'll come back and tell you about what happened from the Fed meeting. But a quick look at the chart of the VIX. Pretty interesting here because we've got a bit of a triangle here. Not a huge one, but it's a descending triangle, and it doesn't matter what security, a triangle is a triangle. So even on the VIX, we want to watch that for a breakout. Remember, with the triangles, we don't pick a direction, but one thing that does make you nervous is how long we've gone sideways here as well. And that makes sense because the market's hardly moved, that the VIX hasn't moved much either. You get that sideways move, and it creates what I like to call the launch pad effect. Maybe dealing with the Space Coast or whatever, but when a stock goes sideways, it tends to just take off and go vertically, kind of like a rocket taking off, so hence the launch pad effect. So be concerned about breaking to the upside, because if the VIX breaks to the upside, that means the markets move down. So that's something you would want to worry about if you're purely bullish on the market. A couple examples here. See how we went sideways here for a bit, and then boom, we had the blast off move, and then we don't have to go too much further back over here where, again, more consolidation sideways, and then big spike in the VIX. And as I mentioned, those big spikes in the VIX tend to correspond with moves down in the market. So all eyes on the Federal Reserve meeting this week. And as I mentioned, we'll be back to talk to you and take you through what the Federal Reserve decided to do, if anything. Take care, everybody.